Hi, we're going to show how to find and reason about stocks that have gapped up or down in volume in the last day. This is a slightly more technically oriented screen than we've had in the past. So, gaps down in volume seems like a good name for this screen. And the question of what does a gap down mean? Well, a gap down is when the next day's opening price is lower than the previous day's closing price. That means that the stock lost value overnight when presumably people during the day couldn't trade it. Similarly, gap up would be when the opening price is higher than the previous day's closing price. So we're going to look for stocks with a fairly significant gap. Let's call it 2%. So the way we're going to do this is we're going to divide, and you would think, oh gee, do I use the open and the close? Open divided by close is less than 0.98. However, this screen, while it looks interesting, isn't actually yet checking for a gap because all we're doing is we're saying that the open is lower than the close of that same day. We need the open of the current day is lower than the close of the previous day to get our gap down. So how do we get the previous? We can search for as of, and if you type that on top, it will go ahead and surround the field that you've done with an as of, and we just want one day ago. And now when we run this, we'll get some number of stocks that have gone down. 131 stocks have gone down 2% overnight. You'll notice that there are a bunch of long tickers. These happen to be ADRs, and it would make sense that there'd be more things that gap down overnight that are ADRs because they're traded on exchanges that aren't in the US. So since we're looking for a technical screen of interesting stocks, that we want to get rid of these. So we're going to say, because otherwise all we're doing is finding the equivalent of Thursday. Now we've gotten rid of a lot. We're going to add another filter, which is we're going to get rid of non-United States stocks. This gets rid of things like VIEs or, for example, Alibaba. Alibaba wasn't in this list, but it could have been because it's not an ADR. The stock itself is in the U.S., but the, all right. So here we go. I'm a little skeptical that Royal Dutch Shell is a U.S. stock. In fact, I happen to know it's not. But let's just go on with life. So the first thing we've determined is this is a good way of finding foreign stocks. It also seems to be a good way of finding stocks that are going to be suffering problems. Since this is an unusual result, almost magically bad, I'm going to go ahead and add a market cap filter to try and make it by reasonable sized stocks. And we're also going to add a closing, actually we already have one because of our universe settings. This will also hopefully get rid of this spike, which I'm going to have to investigate. But it's clearly some stocks spiked down and then spiked back up again. Now we see a more typical dull as dishwater, gee, not a great pattern, but not amazingly awful, just very random. So at this point, we're going to observe that we're trading quarterly. Looking at one day's worth of performance history and then buying for the whole quarter seems like a dangerous thing to do. Naively, you might decide, well, let's trade every day. So if it gapped down yesterday, then we'll buy it today, and then we'll sell it tomorrow, because presumably it won't keep gapping down. This will take a little longer to run, but will still give us an idea of what we're looking for. So we're going to sit here and wait for it to run, and it runs. Now, the next question you're going to ask is, how do I find which stocks gapped down yesterday? Well, that was when we hit the go button, that's what we got. And then if I decide that I want to change it and find out who gapped down at some point in the past, I can easily enough do that and find out that in this time last year, a different set of stocks gapped down. When I use the go back 1 year, I get a different set containing only Nokia, and then Ferrari and a bunch of other stocks. So this is how you find stocks that gapped down. Now we're going to go, just for sheer completeness and joy of this, and look for stocks that gapped up by 2%. We're going to see exactly the same sorts of situations, the same sorts of foreign stocks, the same everything. But the filter will be in the opposite direction, so we're going to be finding stocks that are rising sharply rather than falling sharply. So we're going to have to wait the same 10 seconds that we did last time. Well, probably more like 25. Yeah, it's definitely more like 25 seconds. And there we go. So if you have to buy stocks that gapped up or down 2%, pick the ones that gapped down. They at least are less likely to lose you money. Thank you very much for watching.